Do people in general want to be in the markets, back in the markets, because of the volatility that we saw last week, or is it, spooking investors?
Well, I think it's a bit both. I mean, active investors love volatility, and frankly, I think volatility is probably still too low to really spook investors, but clearly people are more concerned than they were. But frankly, the markets haven't really responded yet to a major fright, which may well be around the corner.
Okay, would it be a political fright? I know you talk about secular stagnation. Is there anything in the either central bank space or in the politics space that could actually move the markets? For the moment, they've been, I don't know whether they've been complacent or cool.
Well, that's the surprise, isn't it? Because what is not going wrong at the moment, right? We've got a major conflagration in the Middle East. We've got emerging market turmoil. We've got a potential, well, not a potential, we've got the start of a trade war, which everybody thought was going to be potentially a trigger for a market correction. We've got currency volatility. So it's really surprising that the markets haven't responded more than they have. And I think the one major explanation for that is probably that there's still a lot of liquidity around through QE. It's not unwound yet in Japan. We're talking about unwinding it or slowing down net asset purchases in the ECB, and the pace of the Fed hikes have been pretty much along market expectations. So that's probably the reason why the markets are still pretty sanguine.
Andreas, good morning.
Hi, Tom.
You're not a public official, so we may actually get an honest answer from you. When you go down to the Allianz, the PIMCO PhDs, do you have an ability to believe that we will see a controlled unwind of these central bank balance sheets? Do you actually buy the public statement by any and all bankers that it will be an easy task?
Well, firstly, I mean, let me just say I can't speak for PIMCO because I'm the CEO of Allianz Global Investors, so they'll have their view. But certainly our analysts and our economists believe that it is possible to unwind in an orderly fashion. But all other things aren't equal, which means that clearly there are political events and other events that can clearly cause enormous problems. The other thing one has to say, this is an experiment that's never been seen before, never been attempted before.
Yeah.
I studied monetary economics. I didn't think QE was going to be possible the way that we did it. And so therefore, it's anybody's guess as to whether it can be unwound in an orderly fashion. Certainly the Fed is showing the way. It looks to be working to a reasonable degree. But if you look at Japan, for example, there the situation is very different because the stock of debt is so high, the government debt, that it's quite difficult to see how that can happen.
When you look, Andreas, at negative interest rates, how do they affect Allianz day to day? How do they affect Deutsche Bank day to day?
Well, it's really negative interest rates and negative real interest rates. That's the real problem, right? Because you could imagine a situation where you have negative interest rates and positive real rates. The negative real rate scenario is one that is at the core of financial repression. It's the one that's causing the wage compression. It's the one that's causing some of the populism, and that's a major issue. It's obviously affecting us politically, but it's also affecting all of our investors who are struggling to find yield, and that has arguably shifted too much liquidity into spread products. In the past, perhaps too much liquidity into emerging markets, which is starting to unwind, and arguably too much liquidity has gone into illiquid assets, where the returns have really also been compressed. So that's storing up potential problems for the future.
Andreas, when you look at economists or economic forecasts, what are they getting wrong? Because there's something that may actually have an impact, of course, on your investments. And so if you see that, that's how you make money.
Well, I'm an economist, and I can unashamedly say that we get most things wrong all the time. So I think the question is, what are they likely, I think, to get wrong, more wrong than other things over the next 5 to 10 years? And I think the key is going to be inflation expectations. And what we've seen in the great unwind of inflation and interest rates between the Volcker era and now was that markets consistently overestimated inflation, underestimated the pace of disinflation. And I would guess that probably markets and economists will underestimate the pace of rise in inflation over the next 5 to 10 years. And that has major implications for markets, for real interest rates, and so on and so forth.